4A income. Yeah, business income. So before we go into the topic, alright, you have to come back to your format of your chargeable income, whereby, alright, starting from 4A income, right, you have to compute your adjusted income from your business, statutory income, aggregate income. Yeah, so it means that you have to complete your 4A first, right, and then 4A here you have to come up to your statutory income, right? And section 4A you can have two business 1 and business 2. So for each business 1 and business 2, you have to come up with your statutory income, right? Then only you add together, becomes aggregate as 9. So what we're going to do today is just looking at your section 4A income, right? So business income. First thing you must know, how do you know whether your income is section 4A income? Yeah? Clearly, of course, you know that what is an employment, what is section 4B, 4C, 4D, and 4E, 4F. 4F kita tak cover lah, right? But section 4A income is normally, the theoretical is that whether an income is subject to tax or not. Right? And normally what we do is that whether a business income, alright, income here is a business income. So if an income is a business income, then it will be taxable under section 4A. But at the same time, you may say that, oh, I do receive an income, but the income is not my business income, and therefore it should not be taxable. So when you want to decide on section 4A or not, alright, then you come to the topic where we talk about, you have to use the wages of trade, right? So you have to look at the wages of trade to decide whether an income is actually a business income or otherwise. Yeah. So under wages of trade, I think that there are about 8 or 9 items there, right? To decide whether a transaction or whether an activity, right, is actually a business income. So under wages of trade, alright, so for example, you see that number 1 is that, okay, before that, alright, the issue here is that whether income is a capital or a revenue in nature, right? So what is a capital income? Capital income means that income which is not recurring, alright? So the capital income, normally you receive one-off income. Yeah, so that's why when you say that, remember your section 3 says that income derived in Malaysia. And then they go further, what do you mean by income, right? So income here, it has to be one of the characteristics of an income, it has to be revenue in nature. What do you mean by revenue in nature? And then they say that, okay, you have to look into these wages of trade, right? For example, for business income. When is capital in nature? Most likely something that is most likely, alright, it's not recurring, alright, and saya nak cakap capital ni. For example, I say that if I have a motor vehicle, right, and I dispose of my motor vehicle, and motor vehicle here is my asset, right? So when I dispose of my motor vehicle, the disposal gives rise to a gain on the disposal. How do you know it's a gain? Then you have to compare your cost and your disposal price, your net book value, everything. Right? Then you know that, oh, there's a gain on my disposal. So the gain on disposal is a capital in nature. Why? Because you're talking about a business, right? But buying and selling a motor vehicle is not your business activity. It's your asset, alright? It's a one-off transaction. You don't sell your motor vehicle asset every day. Alright, so the gain on disposal of that asset is actually it's a capital gain. But if my business is buying and selling a motor vehicle, so when I sell my motor vehicle, what do you call that? Gain or profit? It's a profit, right? So even though you say that it's a gain, or you compare your cost of buying the motor vehicle and then the selling price, you still have a gain, alright, but because the business is actually buying and selling a motor vehicle, so the gain that you receive is actually a business income. Why? Because you are in the business of buying and selling motor vehicle, alright? So that's made the difference between capital gain and a revenue gain. That's a clear example of the difference point. Yeah. So once it's a business income, then you know that you all have to assess that under section 4A. Alright. Revenue, alright, not only that's the example, but normally revenue is also recurring, right? So it's not one-off transaction. For example, right, if you happen to have antiques, for example, yeah, and then you dispose of your antiques, this is the antiques is part of your collection. So disposal of that antique is a capital gain, and you don't actually sell that all the time, right? It may recur, alright, but not regularly. Alright, maybe this year you dispose, another 3-4 years, then you dispose another. Yeah, so then you fall under capital nature. So once it's capital, then it will not be taxed under section 4A, right? But if it's a business frequency, for example, under wages of trade, alright, you are looking at what are those under wages of trade? Wages of trade. So page 215, number 1, you have subject matter of transaction. You have to look at what is the things that you are actually dealing with. Alright, for example, the case where you have your motor vehicle. Is that a business or is it your fixed asset? Yeah, number 2, you have 8.2, period of ownership. So normally, alright, what you have to do with all these wages of trade, alright, when you're given a scenario, what you have to do is that you have to justify whether the income is subject to tax or not using wages of trade, right? So number 2, it says that the period of ownership. So when talking about business, alright, the ownership of the stock in this case, right, is very short. You don't have a business that you hold, alright, and then you take so long time to sell, alright. So normally business, the stock, the ownership of the stock is very short, right? So that's why sometimes they give an example on land or properties, alright? So they say that, okay, I dispose of a land or properties, then they say that whether the disposal of the land is subject to tax or not, right? So subject to tax means that it could be under section 4A lah. Yeah? So what happens is that you have to look at, one of it is that you have to look at the period of ownership lah. Because why? If the period of ownership is very short, you buy and then you sell, alright, what's the reason for the selling? It could be because profit motivated. So if it's a profit motivated, then it could fall under section 4A, even though that could be one off only. You see? So this wages of trade, it doesn't have that you have to fulfill everything. So when you want to argue whether it's taxable or not, so you have to choose lah. Right? If I say that, okay, you say it's not taxable, then you say lah, maybe frequency is only one time. But if you're saying that it's taxable, then even though it's only one time, but the period of ownership is very short, for example. So you have to use all these items, alright, in order to justify whether an income is a business income or otherwise. Number 3 is that we have formation of a company. So when you form a company, most likely you are having a business income. Why you form a company if, alright, I just want to form a company, $2 ringgit. We call it as a 2 ringgit company. Why 2 ringgit companies? Now you can have 1 ringgit company. Where is that you just put in money, 1 ringgit, and then form a company. Previously, you need 2 shareholders. But now you can have 1 company only. 1 shareholder will have to form a company. Alright? So, but most likely, if there is a formation of a company, indicates a business intention. Yeah? Number 4 is that frequency of transaction. Alright, so if it's quite regular, alright, most likely it's business. But it doesn't mean that one time it's not a business income. So you have to look at the scenario, how you want to justify. Alteration to property. So normally, alright, for a business, income is that you buy something and then you do some renovation so that you can sell at a better price and gain a lot more. Right? For example, you have a property, you buy a very dilapidated, alright, a very old house, and then you do renovation and then you sell. And the price could be not only double, it could be triple. Yeah, so that's the gain that you have. So the issue here whether the if that is business or not. Yeah, the profit that you gain, can you consider that as a business income or otherwise? Yeah. So all these badges of trade, alright, when you want to use, you have to use a few of them, not all of them, right? But a few of them to support your argument. Yeah. For example, if you purchase a motor vehicle and then you do some alteration, but the alteration is to ensure that you can use the motor vehicle, right, for business purpose, and then later only you dispose of the motor vehicle. Alright, maybe it's no longer used for the business, then that may not be business income. But if you bought a motor vehicle and then you do some alteration, modification, everything, and then you sell at a higher price, that could be a business income. Circumstances responsible for the realization. So you also have to look at when you sell the land, for example, why do you sell the land? Alright? So the normally scenario is that they give you have a land and then you dispose of because you are migrating, right? Or maybe because you need cash, right? Because remember that when you talk about capital, right, relate that with investment purpose, right? Investment. When you buy a land, alright, as an investment means that you're going to hold the land for some period of time. Similarly to your properties or any other asset. Or for example, if you purchase shares, right? Remember, when you purchase shares in a company, your income is in the form of dividend. This when you have your dividend, so that is section 4C. But when you dispose of the shares here, shares is your asset, your investment. So disposal of investment is not 4C, right? And again, is the disposal of shares is subject to section 4A. Yes or no? You have shares and then you dispose of the share and then you have gain on the disposal of shares. Is that taxable? Taxable? Again, you buy shares, from the shares you receive dividend. So the dividend is accessible under section 4C, it's clear. But when you have these shares and then later you dispose of the shares, upon disposal you have gain on the disposal of the shares. Sometimes we call it gain on disposal of your investment. Tax or not? Tax or not? Depends. Period. Other than that? If your business is in buying and selling shares, then it's taxable. But if your investment, the shares is your investment, how do you know it's investment? Maybe the ownership, the period of ownership is longer. Alright? And why you sell? Alright? So most likely you sell because you need money or you want to migrate or whatever. So the shares here is your investment. Disposal of that investment is non-taxable. It's not business income. Why? Because that shares is your capital and that capital generate income dividend. Can you see the difference? Similarly, if you have properties, rented out your property, you have rental income. Rental income is section 4D. But when you dispose of your property, is it subject to RPGT? Right? RPGT memang kena lah. But whether it's subject to income tax or not, it depends again. If you are in the business of buying and selling or renting of properties, then the disposal is subject to income tax under section 4A. But if the property is your investment, right, and then it's not subject to that. But later when you do your tax too, property fall under real property gains tax. Yeah, so that is a different act. Yeah. Okay. What else? Dah berapa dah? Number 7 is a motive or intention. Alright, if you look at the motive, for example, it's clearly motive is to make profit, then it's business business lah. But motives is very difficult to make to come up with evidence of your motive. Yeah. So again, it's subject to your argument. Methods employed in disposing a property. For example, if you have to employ an agent, for example, alright, or for example, in order for you to dispose of your stocks, alright, you need to have some kind of promotion, marketing, all that. So most likely the method that you employ is subject to, this indicates business income. Financing arrangement, right? Most likely, right, in business, when you want to do business, you will take up bank loan, for example, as your working capital, right? But it doesn't mean that every time you take bank loan, when you purchase an asset, disposal of that will subject. So again, you have to use this item to support your argument. Alright, if you say that, alright, the income is subject to tax because one of the reasons because the individual or the company take up loan in order to finance the business. Right, things that you use lah. Again, alright, this is a very subjective. It depends on how you argue your case lah. Accounting evidence, most likely business will have their accounting records. Yeah, you have all these put into in place, or all these accounting record, whether your profit or loss or the cost of it, everything is recorded. So that indicates that you are actually serious about the business. Yeah, but some companies don't even have recording. Right, they don't have any accounting records, but they are actually doing business. So that is also possible. Yeah. Okay. So that's how you use wages of trade. So the question on wages of trade is normally theoretical. They give you a scenario and then you have to justify using wages of trade, right? Advise whether the income is subject to income tax. Right? So there you are, wages of trade. Right? So you look at the wages of trade on 244. Right? They give you whether is it capital or income, so you can look into that lah. 224, sorry, 224. Okay. Yeah, I won't be able to go through all the textbook page by page lah. Nanti tak sempat. Alright, how do you know? Okay, now remember the income. You're talking about business income. It only taxable in Malaysia if the income is derived in Malaysia. So for business income, how do you know it's derived in Malaysia? What does it say? Alright, one must first establish whether the following condition exist. Number one is that the existence of a business source. So you must make sure that, okay, you do have business source first. Right? Because now you know that business source is there, but now you have to see whether it's derived in Malaysia or not. Because even though you have a business source, but if the income is not derived in Malaysia, it will not be taxed. Because the law says that income derived in Malaysia. Number two is that the business transaction is income in nature. So that is under wages of trade. And number three, such business income is deemed. Dua je. Loh, itu je. Mana ya? Itu je. Section 12 ni kata apa? Residual section to tax whatever gross income that is not attributable to operation of business carried on outside Malaysia would be deemed Malaysian derived income. Apa dia cakap ni? Dia saya cakap pasal Malaysia. Business source, mana dia kena ada income in nature, revenue. Such business is deemed derived from Malaysia. Itu yang extension apa? So section 12 1A kata law dia tulisan kecil tu susah betul nak baca. Section 2 subject dia ayat dia ni. Subject to subsection 2, so much of the gross income from the business as is not attributable to operation on the business carried on outside Malaysia shall be deemed to be derived from Malaysia. It serves as a residual section to tax whatever gross income that is not attributable to operation of business carried on outside Malaysia would be deemed Malaysian derived income. Alright, let's look at an example. Tak apalah, pinjam Chung Your Sdn Bhd carry on business of food manufacturing in Malaysia. Production is wholly for the local consumption. Company managed to arrange a deal between chicken suppliers in Taiwan. Macam tahu pula isu chicken sekarang. Right, to dispose their livestock to Hong Kong, the company earns commission of 48,000. Since the commission income is not attributable to business operation in Taiwan or Hong Kong, then the Malaysian Tax Authority is empowered to deem such income to be derived from Malaysia by virtue of section 12(1)(a). So what it says is that, alright, generally we say that business income is carried on in Malaysia or attributable to business to your operation in Malaysia. So in that case, it will be derived in Malaysia. But in the case here, it says that it come out with 21(a), alright, it means that it says it's wider. It means that if it's not attributable to outside business, then it becomes Malaysian business. Right? So it's very dangerous, whereby it says that in this case, they have a business with Taiwan and Hong Kong, alright, but the business has nothing to do with their operation outside Malaysia. They don't have any other operation outside Malaysia, so the only business they have is in Malaysia. So even though now the business is outside Malaysia with Hong Kong and Taiwan, but since they don't have any other operation outside Malaysia, so that operation is deemed to be derived in Malaysia. Right? So that's why it's called a residual section. Right? It means that it doesn't fall there, okay, it falls here. Right? Remember that for the tax authority, for the tax law, is always trying to make it as general as the base is as wider as possible, so that the more they can charge tax, the more income can be collected from the tax. So that's why the law is becoming wider. Alright, if last time it's very specific, but now it makes it very more wider, so that they can get as much income that fall into that scope. Right, the understanding of the phrase operation of the business carried on outside Malaysia is important, as profit attributable to those operations are not derived from Malaysia and would not be taxed in Malaysia. But in the case just now, dia tak ada operation outside Malaysia. Yeah? To serve as a guide, business income is said to be attributable to operation of the business in Malaysia and be deemed derived from Malaysia if one or more of the following factors are present. Contract concluded in Malaysia, stocks maintained in Malaysia, passing of ownership and risk of trading stocks in Malaysia, sale proceeds received in Malaysia, services rendered in Malaysia. Any one of that. Yeah? So if any one of that fall, then it's taxed in Malaysia, because why? It's deemed derived in Malaysia. Right. 12B says, right, ni semua very clear lah. Sale value, market value, section 12.2, 12.3, right. In other words, generally, alright, as long as the operation is in Malaysia, then it's derived in Malaysia, except for the 12(1)(a) just now lah. Yeah. Alright. Okay, commencement of business. I will cover that later. Okay. For a business on page 234. Commencement I will cover next class when we do basis period. Yeah. On page 234, we have single or separate businesses. The Act allows more than one business to be carried out within a business entity. So that's why I say that you have a business, you can have business 1 and business 2 under the same entity. Alright? Which refers to the sole proprietor, partnership, LLP, Berhad or Sdn Bhd. The issue of a single or separate business source is important for Malaysian income tax purpose, particularly in relation to the utilization of capital allowance from one business source cannot be set off against income from another business source. So why I say that, remember that for this B1, you have to compute your statutory income. In order to compute statutory income, your adjusted income minus capital allowance. So when you have one company having two businesses, you have to identify which asset is used for business 1, which asset is used for business 2. Because why? For you to compute CA, it must only related to asset for B1. And for business 2, only asset regard to the business 2. You cannot claim here, claim there, or definitely cannot. Right, but it has to be very clear which asset, right? Because you have to compute SI for each of the business. Alright, so if you have, for example, you have CA carry forward, right? Assuming that this one later is liquidated, right? Whatever CA that you have, the balance here you cannot transfer to business 2. Yeah, so that's why it's very important for you to decide whether you want a company to have one business or two businesses. Yeah, whether a company commences a new activity which is regarded as having extended its existing business, or has commenced a new business source. So if you extend your business, right, you can fall under similar business income. But if you have another business source, then now you have business 2. Yeah, business 1 and business 2. Depends entirely on the nature and interdependence of such activities. There are no specific rules for making such a determination, and guidance will have to be sought from general principles established by the courts. It depends on the facts and circumstances of each case. Manufacturing and trading are to be treated as two business sources. So definitely, if you have a company that manufacture, and at the same time they also sell the goods. So now you have manufacturing business and trading business, right? It must be very clear. Okay. So this is another way, for example, especially for your professional paper, this kind of question is almost there, right? It's always there. Then you say that one of the question prior year's exam question, the business is mineral water, right? And then now from the mineral water, they also venture into business ice cube, right? Business 1 is your mineral water, business 2 is ice cube. Then you have to decide whether business 1, business 2, is it one business or two separate businesses? Which one is better? Which one is better? Want to have one business or two businesses? Two? For income tax purpose, have one business. Why? All the assets will be used, you claim everything under one business. So you won't have problem of allowance which is not utilized. For example, if you have business 1, business 2, if business 1 is making losses, so you will not utilize your CA. So you keep on carry forward your CA, but then if anything, then you can never have that CA to be absorbed by another business 2. Right? But of course you have losses, you can have losses, the losses can be set off against your aggregate income, but we always look at how can we maximize the claims. How can we maximize the claim on your capital allowance? Yeah? So if you, for example, in this case, if you can show that the business of mineral water and the ice cube are interdependent. Yeah? Interdependent. So in order for you to have cube, you have to have the same asset is being used, for example, then you can say that, oh, it should be under assessed under one business. But if it's no interdependence between these two businesses, then it has to be separated. Yeah? Your advice is always to have it under one. And how can you make the businesses to be interdependent? Right? So that's how we come and advise lah. How can we find a way so that these two businesses are interdependent? Of course, income tax we always say that no, it's two different separate businesses. Taxpayer we always argue that it's one business. Right? Because why? RB we will say two businesses because they may give higher tax liability. Taxpayer will always try to make it argue it's a one business so that we have a lower tax levy. Yeah. You can read the case law of that. Okay. So gross income here, right now you have to say what is your 4A income. Right, so once you identify your income, you have to say, is it a 4A income or other income? Other income means that you have 4A income or non-4A income. Non-4A income, it could be 4C, 4D lah. Because you're talking about, it could be individual also, right? So, talking about tax 1, right, you're talking about individual having a business, so individual having enterprise. Not sendirian berhad, yeah? Because enterprise means that it's a sole proprietorship. So sole proprietorship income will be attached on the individual tax. But you're talking about a company, right? We refer to sendirian berhad or a berhad company, right? Tax is on the company. And what's the difference? Of course, the tax rate is different, right? Because individual is based on the scale rate, provided that he is a resident. But for company, it's always at 24% flat rate. Of course, we do have the rate for the small medium enterprise. Yeah. So the competition is almost the same, right? The way that you compete for individual and company is almost the same, but the focus for individual, right? Of course, the income and the expenditure talking about enterprise is not so much. Yeah. And then the transaction is simpler, and talking about income, most likely income is from business, right? But talking about company, the income is a lot more. For example, you can have income from compensation of insurance. Then you have to decide whether the income from the insurance company, right, is it taxable or not, right? Similarly, individual can also have the same thing, yeah. And then, for example, you have in this case you have the trading debts, right? Debts. Debts, alright, initially is a expense, isn't it? When can the debts become an income? When there's a recovery, right? Recovery. So it means that later, when there's a recovery of your trading debts, then you have to decide the recovery, the income that you receive here, is it taxable or not? Is it business income or not? Right? Even though, for example, a company, you say that, okay, I'm buying and selling a motor vehicle, right? So now I have trading debt recovery from my trade debts, yeah? So then I have to decide this income, is it business income or not? Yeah? So then you have to look furthermore. Yeah, you have to look at when it was a bad debt, was it deductible expense? Was it a business expenditure? If it's a business expenditure, means that the income is also business income. Right? So in other words, say that if your debt is a trade debt, then you give deduction. Why? Because it was a business expenditure. So when it becomes a income, when there's a recovery, so then it is a business income. So when it's a business income, it will be taxable. Yeah? So that is an example. Similarly for your insurance. So if the insurance, remember that you take up insurance, you have to pay premium every month. Yeah? So for companies, they also pay their premium. So if the expenditure, the premium that you pay, we're talking about individual for the business, either enterprise or sendirian berhad, the premium that you pay, if it's allowable, this expenditure, right, means that later we look into expenditure again. So at this point, if the expenditure is deductible, then when you receive compensation from that insurance, that income is taxable. So kalau the expense I bagi you deduct, kalau it becomes an income, I have to tax you. But if the expenditure was not deductible, why? Because it's not business income, it's not business expenditure. When it becomes income, it's not a business income, so it will not be taxed. deposit on service. Okay, but you're talking about if you're talking about let me see, you're talking about you have kat mana itu Okay, for business, alright, later when you look into company, right, so what happens is that if the company give apa ni nak cakap dia charge interest. Company, right, receive interest income. Alright, because why they receive income? Because in this case, because they are on debt. Right, and this debt is made by the customer. Right, what it means is that, right, if for example I give you, you can pay me later, right? In this case, you're talking about buying and selling, yeah. So I sell you, and then from there, because you pay me late, I will charge you interest on that. So the interest received, alright, is actually section 4C. Yeah, because it's not the company business of giving loan or giving advances or giving. So that's not the business of the company. So that's why the interest that you receive will be assessed under section 4C. But if the business is actually dealing with interest, for example, banks, right? So the interest is a business income, right? So make a difference on that. So here you have to see whether what is the main business. So kalau you do audit, kita panggil what is the business activity, what is the business objective, right? So what is the main business objective of the company? Then you have to see whether the nature of the business. Then you can decide whether the income is actually business income or section 4C income. Alright, 13.5, it says that on page 239, the following shall be treated as a gross income. The one is the market value of any stock in trade which has been taken for private purpose without payment, or any stock withdrawn from business for gift or donation other than disposal. So what happens is that, especially for individual, right? In the case where you have withdrawals with drawings, yeah, drawing for personal use. So whenever you have drawing, it means that you take up the stock of the company for your personal use, right? So remember that whenever there's a personal usage, for example in this case, alright, that is regarded as a gross income. So you have to look at, okay, I withdraw stock that cost me, the market value of the stock is 10,000 ringgit. But I don't pay anything because it's a withdrawal. It's a drawing, yeah? So even though it's a drawing, you don't have to pay for it, but it has to be included as part of your gross income. So in other words, even though you don't sell, right, you don't pay for it, it will be taxed on the business. So it means that maybe, alright, in the information you have sales, and notes to the account you have part of the cost is that there's a drawing, right? So whatever the market value of that asset or of the stock, it has to be added to your sales, the market value of the stock, right? So in other words, even though you can simply withdraw, right? You don't have to pay for it. Still, you have to pay tax on the stock, as if you make sales on the asset. Yeah. Dividend income of a share dealing business. So if you are in the business of dealing with shares, so the dividend income is a section 4A income. Interest income of an investment dealing business. Yeah, so if you are in the business of dealing with interest or money lending business, so that's why I say that, for example, bankings, right? Or we have a lot of small companies that actually give loans. Yeah, Kak Long lah. Dia memang tak bayar tax. Market value of the goods exported in the course of carrying on the business, recovery of a bad debt, so I mentioned just now, which has previously been allowed as a deduction in determining the adjusted income. The excess of recovered expenditure within the meaning of Schedule 2, excess or of recovered expenditure, residual expenditure of a mine, okay ni tak adalah, pasal mining tak payah, is there, but I will not test you. Waiver of debt by creditor which pertaining to any amount of expenditure previously allowed as a deduction in determining the adjusted income. So assuming lah, alright, you are the, in this case you are the creditor, alright, and creditor waive your debts. So you owe money to other person, right? It's a liability kan? But then now there's a waiver of the credit or waiver of the amount owing to. So the waiver will be assessed as your gross income. So you have to add lah, alright? So what happens is that what you are given is later. You see that I give you statement of comprehensive income, right? With all the income and expenditure, right? So under income, I can have sales, I can have interest income, I can have rental income. So you have to do adjustment. So whatever here is that it may not be here, but they give you notes to the account, information, additional information. So based on the information provided, then you have to do adjustment. For example, it says that included in the whatever, right, is a waiver of debts by creditors. So the waiver of debts may not be in the statement, so you have to add on. Yeah, because that will be additional tax, additional income that you have to be taxed. Alright. Cessation of business, where a business is said to have ceased, is crucial to analyze whether it has ceased temporarily or permanently. Because when you cease operation, temporary and permanent has different tax treatment. It depends on the circumstances. If it's a temporary, alright, if the assets are under working condition and constant upkeep and maintenance, the company intends to operate the business as and when any opportunity arises. So that is a temporary cessation. So what happens is that if the company is said to be carrying on business even in the period of temporary cessation, yeah. So any expenditure that you incurred during the temporary cessation is still an expense which is deductible. If it's an income that you receive during that period, it's also taxable. Yeah. So kalau income, the word is whether it's taxable or non-taxable. Expenditure, whether it's allowable or deductible, or non-allowable or non-deductible. Right? Revenue expense will be deductible in arriving to the adjusted income, revenue expenditure. Right? So even though you are not having business cessation but temporarily, alright, but during this cessation you have to incur maintenance of your asset, and then you still have to pay staff, minimum number of staff for example. Alright, during that period all this expenditure is deductible. So when you have a cessation, most likely you don't have sales. So most likely you will have your adjusted loss. Is it good to have adjusted loss? Good for tax purpose. Why? Bila you ada adjusted loss, you can set off against your aggregate income. Even if you don't have any aggregate income, the losses can be carried forward to following years. So later when you have your income, it can be set off by the losses. Yeah. Capital allowance on the qualified expenditure will continue to be claimed. Right? Not only expenditure, CA pun you continue to claim. So what happened that if you claim during the period where you don't have income, right? Because you are cessation temporarily, so most likely income is zero. So income zero, then you still claim your CA. So what happened to your CA? Are you utilizing your capital allowance? You claim but you don't utilize. You carry forward to next year. So when you carry forward to next year, then the following years, when you do have income, you have bigger CA brought forward. So that will reduce your statutory income. Does it make sense? But you have, in order for you to do this, you have to make sure that it's a temporary permanent, a temporary cessation. How to ensure temporary? You have to maintain the business, or you have to incur some expenditure, for example, maintenance of maid, staff. You still have to have some staff, a minimum number of staff, yeah, to make sure that it is a temporary cessation. Why? Because if it's a permanent cessation, alright, how do you know? It could be from the board minutes, or if there is any situation such as disposal of all plant and machine used in the business. So the tax implication will be revenue expense will not be deductible, and such expense is a permanent loss. Unabsorbed CA will be permanently lost, and any division of asset, including undistributed profit, will be capital received in the hand of recipient. That one is good. Alright, number 3 is good because remember when you liquidate, you have to compute how much is your amount owing to, then only the balance you will distribute to your shareholders. So if it's a permanent cessation, right, the distribution of the residue, right, to the shareholders is deemed to be capital nature in the hand of the recipients. So it will not be taxed on the recipients. But remember that now you have invested in the company, now company cease, of course you get something which will not be taxed, but again your investment is habis lah, loss lah. Tak hangus, you dapat sikit lah kalau dapat, if you have balances, residue. Yeah? Alright, so that is covers your gross business income. You will understand this topic better when you do the question. Because normally question is on this one, right? And you have to decide whether the income is section 4A income. So kalau income you nak decide apa? Not only taxable, whether it's a 4A income or non-4A income. Non-4A maknanya dia ada 4C or 4D lah. It could be dividend income, interest income, rental income. Yeah? And then whether non-taxable income. Right? Because once you identify those income, then you should know what would be your tax treatment. Okay, given your SOKI, you have a profit before tax, then you have to decide the adjustment. Okay, what is the time now? 9:20. Ada 20 more minutes, we go into business expenses. Right, so for business expenses, I will not go very detailed. A lot. You better make notes on your business expenses. The same notes you have to use it when you do your tax too. This topic, corporate business income expenses, will go into your tax 2, right? And the marks is normally 30%. Your final also, I think, I think about 20 to 30%. But I do not know, for me, alright, this chapter, right, sebenarnya easy to mark, not easy to mark, easy to score. Alright? But you really have to understand the concept here. Right? So I have my YouTube on business income, business expenses. You can also refer to that because I will together do a tutorial question on that. But the tutorial question is normally on company. But before ni I tak ajar tax 1 sangat. I selalu ajar tax 2 and advanced tax. Yeah? So what happened is that the example is on company, but you can actually use the same one for your tax 1 purpose. Right? Because the tax expenditure, the difference is that enterprise smaller, right? The computation is less than the company. Right? And then kalau enterprise tak adalah question on export ke, promotion ke, double deduction, not so much. Because that is normally applicable for companies. Remember that enterprise is small company, yeah? Individual, small company. Most likely drawings. Yeah? A lot of drawings, a lot of expenditure which is not deductible. So you have to do adjustment for that. Alright? So So we're talking about expenditure. Wow. I think that I punya YouTube not bad lah juga on this business expense. Because why? Because most of my ex-students or even external, right? They watch my video because in any professional paper definitely ada corporate tax soalan. The same corporate tax, right? Everywhere you find question on corporate tax, right? And then just that there's so many expenditure here. Apa page? Ni chapter 40, chapter 15 kan? 288, 243, 45 pages only, right? So might as well you do notes on that. Because why? If you keep on referring to this, right, you confuse. Okay? So let me give you a general idea on expenditure. Expenses. Yeah? So when you do dealing with expenditure, right, remember that you have your SOCI is given income minus your expenditure, and then here you have profit before tax. Right? So why we call it as a profit before tax? That is profit before we pay tax. Alright? But if you look into your financial account, alright, if you're looking at your annual report, for example, you have profit there, alright, and then they assume tax at 24%, and then you compute 24% of that profit. But that is for accounting purpose, right? But for income tax, we don't compute your tax based on that, right? Your tax is on your chargeable income. In arriving to chargeable income, you have to do a lot of adjustment, right? So when talking about expenses here, most likely long list of expenses. It could be short, but the notes will be longer. Yeah? You nak mana? Duduk boleh. Right? So whatever it is, you have to refer to both, not only the SOCI, but also you have to follow through the notes to the accounts. And normally notes to the accounts, it could be 2, 3, 4 pages. Unlikely 2 pages, 3 or 4. It will be fine. Minimal 3 lah. Right? Okay. So what you have to do here? So when you are dealing with expenses, you have to know the nature of the expenses. What type of expenditure that you have. So when you talk about expenses, alright, these expenses are 3 types of expenses. Number 1 is the expenditure which is allowed by the law, or sometimes we call it as a deductible. So when I say the expenditure is allowable or deductible, it means that the law says that, oh, you have this expenditure, it's okay for you to deduct. Alright? And remember that we do not want to compute the tax on PBT. We want to compute tax on based on adjusted income. Right? Adjusted income. So what is adjusted income? Gross income minus allowable expenditure. Then you have your adjusted income. Whether is it for business, for A, for B, for C, for D. Whatever your gross income minus allowable expenditure. But when I give you SOCI, right, the expenditure here is everything here. Ada yang allowable, ada yang non-allowable, and also have the double deduction punya expenditure. It's all there. Right? You have to decide each and every one of these expenditure, whether is it allowable or is it not allowed, non-deductible, or you can claim double deduction. Okay? The problem is that the student do not know whether the expenditure is allowable or not, whether you can claim double deduction or the expenditure is not allowed. Why? Not enough exercises. And maybe you don't read your textbook, right? Or you don't have notes to refer to when you do the tutorial, right? So how do you know that the expenditure is allowable or not? The law says that you must go under section 33 and section 34. Only expenditure under section 33 and section 34 is allowed. Other than that, not allowed. Okay? But what about not allowed expenditure? Right? If it's not allowed under 33, 34, then it becomes non-allowable. Alright? And to make it easier, alright, we do also have section 39 for non-deductible expenditure. So section 39 is a list of expenditure which is not allowed. Section 33. What is under section 33? In your textbook, okay. Section 33(1) of the Act. Subject to this Act, the adjusted income of a person from a source for the basis period for a year of assessment shall be an amount ascertained by deducting from the gross income of that person from that source of for that period. It's very clear. Right? From that person, you can deduct expenditure, right? The gross income of that person from that source. So means that you can have source from section 4A, 4C, 4D. Alright? For that period. So it means that you must know what is your period that you are actually accessing. Alright? All, okay, ni kena highlight. Outgoings and expenses. Number 1. Right? It has to be number 1. Outgoing and expenses. Number 2 cakap apa? Wholly, exclusively incurred. Incurred ni ada ED ke tak? What do you mean by incurred? Means that you must have incurred. Bukan will incur, no. Incurred. Right? Outgoing means that what? You have to pay out for it. It can be an expense, yes. But it must also be outgoing. In other words, alright, there are some of these expenditure here which are regarded as expenditure but not outgoing. Any idea? Example. Depreciation is not outgoing because you don't have to pay for your depreciation. Lagi? Amortization. You don't pay for your amortization. Lagi? Apa lagi? Provision. Pernah dengar provision? Example of provision. Doubtful debts. Lagi? What do you provide for? Provision for stock obsolete. Provision for gratuity. Provision for apa lagi ya? Banyak. Taklah banyak. Normally yang tu je lah. But what do you mean by provision? What do you understand by provision? Why do you think that provision is not allowed? On what basis provision is not allowed? One is not outgoing, the other one is not. Ingat belum? Accounting, kenapa kita ada provision? Accounting principle, which one? Sudah. Ha? Accounting principle apa? Oh, astaghfirullah. Prudent. Very good. Conservative. Kenapa prudent? Maknanya we take into account something that we may have to pay later, we provide now. We put aside the money now. Alright, macam gratuity. You have to pay gratuity to your employee bila dia retire. Takkan bila retire duit tak ada? Tak ada lah. You have to put aside the provision for your gratuity So later you akan pay gratuity out of the provision account. Right? So whenever you have provision, you have to identify what is the provision made during the year, and then the provision that you actually pay out. Because the one that you provision during the year is not allowed, because that one is not incurred. You just put aside. Right? But when you pay out the gratuity, that is incurred. That is an expenditure outgoing. You get that? Provision is not allowed. Alright, apa lagi? Wholly expenses incurred. Number 3. Now, incurred kat bawah Incurred one of the criteria. Number 4 is in the production of income. What do you mean by production of income? So means that kalau you tengok the income is a business income, section 4A, expenditure must be incurred for 4A only. If the income is section 4D, rental income, expenditure that you claim must be for 4D only. Remember this one, allowable expenditure ni? Katalah dia rental, must be allowable expenditure for rental only. So let's make an example. You have a business, right? You have a trading business, but at the same time you have a property. And from that property you derive your rental income. Okay? Right? So you ada dua income. One is from sales, the other one from rental. Alright? So but in order to finance the business, alright, you take up loan 100,000 loan, and using the loan of 100,000 you finance your business working capital 60,000, and the balance, alright, you buy a property 40,000. Mark, when you take up loan, what are the expenditure associated to the loan? Interest. Assuming interest is 10%. So during the year, how much is your interest? 10,000. Right? So the 10,000 interest is charged in your SOKI. Okay? So bila I want to compute my income, adjusted income for my 4A, how much can I deduct? Interest aspect. You can only deduct for business, the interest is only 6,000. Interest for your property, because from here you generate your rental income, interest here is 4,000. Right? But you in your SOKI, you ada 10 kat sini. Kena buat adjustment tak? Kena. Because the one that is allowed against your 4A income is only 6. The 4,000 is has to be deducted against your rental income. So how are you going to do that? Kalau you tolak 10, you deducted 10,000 there in arriving to PBT. When you do your tax com, you always start with your PBT. Alright? So the adjustment is that, alright, from here, 6 is okay, allowable, because 6 incurred in the production of business income. But the 4,000 is non-deductible. Why? Because it's not section 33. Mark. So, if 3 is not allowed, you don't deduct 10. Sorry, 3 block 4. You deducted 4, but you can only deduct 6. What happened to the 4? 4 is a non-allowable. 4 business income. So what I have to do now? How to adjust? But you start dengan PBT. You dah deducted, you have deducted 10,000. How can you amend? I can, from that 10,000, I can only allow 6. So what happened to the 4? It's not allowed. So what you do? Agak-agak counting ini logik. I dah tolak 10, patut I tolak 6 je. What should I do now? Add 4 lah. Accounting ke tax? Huh? That max kan? Max. Nothing to do with tax, huh? That is logic. Alright, I deducted 10, but actually I should only deducted 6. But I have deducted 10. So what I have to do? I have to add back 4. Interest, I add back 4. Why? Because here I want to compute income from your section 4. But this 4, remember rental, katalah dalam income you have rental of 6,000. Right? Sales ada 20,000. If you want to compute the top is the adjusted income from your business, can I include my in PBT sales? Should it be there or not? Is it a business income? Sales? Yes lah. Right? It's a business income. So you have to do adjustment for sales. But sales ni tak writing to PBT, you dah ada sales ni. So this one is section 4A. So when you start from PBT, sales, you nak buat adjustment tak? No lah, because you have tax on that sales. That sales income is a business income. So if it's already there, you don't have to do anything. No adjustment. But what about your rental income? Assuming that rental income here is section 4D, it's in your PBT. Rental income. So what you do now? Why you tolak? So kenapa you nak tolak pula sekarang ni? You have to take it out because it's not 4A. Alright? It's not 4A, it's 4D. 4D at the bottom. Kalau cakap at bottom, you nampak bottom tu kat mana? Kanan? Bawah. So your format of chargeable income tu must be here already now. Right? Because this one very important. You nak pakai tax tu, advance tax semua, you pakai professional paper, you pakai benda ni. I assume everyone will take professional paper, kan? You will use it 30%, you know. Soalan corporate tax, professional paper is a compulsory question number 1. Dah tahu dah, soalan tu memang number 1. Right? So you belajar benda betul-betul. Okay, so what happened is that rental is included, 6,000 is included under income, but this rental is not business income. So dah saya cakap, you kena tahu tadi, business income tu 4A ke, non-4A ke atau non-taxable. So if it's not, then you have to take out. How to take out? If you have added in arriving to PBT, you minus. Okay? So bila you minus, remember you tambah kat sana kat bawah nanti. You tambah 6 kat sini. Section 4D. Kat bawah, at the bottom. Right? Ni section 4D. You add here. Why you add? Because the income is taxable. It's just not, it's not 4A income, it's 4D income. So the computation is at the bottom. Take it out from business, assess at the bottom. Can you deduct allowable expenditure? Yes. Now you deduct against your. Why? Because the 4,000 here is incurred in the production of your rental income. Nampak? Nampak? Orang buat suka hati campur tolak terbaik selain itu. Okay, 2 more minutes. So concept must be there. Faham ni? What do you mean by allowable deductible expenditure? Kalau not allowed, maknanya if expenditure you have to add back. If its expenditure is allowable, you put nil. Nil is for no adjustment. Alright? So how do you know whether expenditure is no adjustment? If the expenditure is outgoing or expenditure incurred wholly, exclusively in the production of that income, that is deductible. And that is section 33. What about section 34? It's also allowable. Section 34 ni kita panggil special deduction. Right? Special deduction, satu lagi dia panggil tak tahu. What is section 34? Kalau section 33 is very general punya provision. You will check and then you fulfill here or not. Yes, then you have to decide deductible or not. But section 34 is a special special deduction, they give you list of expenditure under section 34 that whether it fulfill 33 or not doesn't matter. But this special, as long as it's stated under section 34, is allowable. So how will you know your section 34? Because it's special, right? There's no kind of general provision for that. So they give you a list. What the list? You must know the list lah. Section 34. So 34 6 A B C D E F G H I J K L M N O, I think. Ada berapa? 34, mana is 34? 34 2. Alright, another way to look at it, you boleh tengok, okay, this topic business income expenses, you kena refer to chapter 4, and then you have, ada chapter 4. Okay, chapter 4, sekejap group relief, okay ni lah, ini 44, salah, section 34, mesti kat sebelum ni. Apa? Ha, dah ada dah. The list, ini prohibited, 40. 42 special deduction. Ada berapa? Sampai apa? 9, ni apa? 10, 11, 12, 13. Betul tak? I 10, I, J, K, J 10. J, K, L, M, N. N je. Oh, tak sampai O lah. O 15. Right? So kalau you look into the Income Tax Act, dia A, B, C, D, E tu. 34, section 34, 6. Betul lah? Section 34, 6, A, B, C, D, E. Right? So you kena tengok. So this dia bagi you summary je. But later when you do business expenses, topik yang tadi tu, chapter berapa tadi? 19 or 14. Right, they give you more details lah. Yeah. Okay. So that's section 34. Buat list. Later when you go, because every question will not test everything. Right? But different question will test you differently lah. And then section 39, alright. You boleh tengok dekat chapter 4 is the list of non-deductible expense. Apa lagi nak? Double deduction pun you buat list. Expenditure under double deduction. So ingat ada benda tu, buat notes, and then buat lah taxcom. Yeah? So next class insyaAllah we continue a bit, go very detail on your expenditure, right? With that, I see you insyaAllah next class. Assalamualaikum warahmatullahi wabarakatuh. Next Monday, I takkan buat face to face class next Monday. But weekend tu, but dah stop lah.